Welcome back to Stocklabs Market Recaps. And we are 3 weeks into May, just wrapped up option expiration, May 20th for the month. And yeah, years chugging along, almost halfway through, another month. And, there's really been no reprieve for the bulls. So it was another wild week for markets. We started off um, with kind of a bit of an attempt at a rally that ultimately failed, especially around the time that the Fed or Jerome Powell was making some comments about Fed policy and what their stance is and all of that sort of stuff. Basically, he just said that they're going to keep hiking rates until everything falls apart, because inflation is the number one priority above all, above employment and all of that stuff. So, willing to take job losses in the economy in order to get inflation under control. Only way that really plays out realistically is you just induce a recession and have a bunch of layoffs, demand destruction, and all that stuff. So, market is dealing with, trying to digest that, which is obviously that is not good for the equity environment. Um, as far as for the week overall, even though we tried that rally early in the week that failed, the entire week finished down. So S&P was down 3%. Um, IWM actually hung in, only down 1%. And, it's kind of funny. We consider that, a good week now, down 1%. Dow down 3%, and the NASDAQ smoked again, almost 4.5% down. Bonds have started to catch a little bit of a bid. He was sort of talking about the um, forward guidance from the Fed. Um, if the market is anticipating that a recession is going to, take hold and be pretty persistent, then rates are going to start drifting back down. So, I mean, that's a little bit constructive for the market, but you don't want rates going down because you're in a recession, because that's nonsense that it would be bullish for stocks. But anyway, TLT having some pretty good performances. Gold kind of getting back on its feet a little bit, up 2% this week. And the oil was flat. So we've been talking about that the oil trade has gotten pretty volatile, pretty choppy the last several weeks, probably the last 5-6 weeks or more. So that's kind of just in the same range. If we look at our leadership stocks, these got hammered this week, and these are really ragdolling the indices around just because they're so big. Um, Worst performer, Tesla, down 14%. I don't know if there was anything specific. I know Elon's been basically being insane in the media and on Twitter and all this stuff. There's the Twitter acquisition, which isn't directly related to Tesla, but Elon being a lightning rod all the time is just another variable that people are dealing with. Apple, it's rare that Apple is one of the worst performers out of this group, but it really, really took a hit this week, down 6%. Google, same thing, down 6%. Amazon, another 5%. So these are big moves for big stocks, and it's no surprise that the indices are getting thrown around every which way. When you have these gigantic companies trading like mid caps or small caps. So yeah, it's a lot to manage. Um, if we jump into our industries to see what sort of breadth we had sector wise, you can see there's not really any clear. I mean, overall it's down, but there were some brighter spots. So utilities did pretty well. Healthcare I think this is the first time healthcare has been green on a median basis in months, maybe. Literally months. I don't think this is. I don't think this sector has been green for a long time on a weekly basis. Basic materials, nice bid, even though the commodity trade has kind of flattened out a little bit. Um, basic materials was hit pretty hard last week, and I think the week before too. So they're bouncing back a little bit. Consumer down big, and services down big. Um, can talk about that a little later. And technology actually relatively flat. Even the Nasdaq was down 4.5%. So, like I said, that the Qs are heavily weighted towards those very large, very large cap stocks. But overall, if you were messing around with other tech stocks, maybe there was some better performance there because um, overall the sector wasn't a screaming sell. As far as subsectors, not much in the way of upside outperformance. So solar, copper, and alt energy were up over 5%. That's it, and the rest, you know, trends towards negative pretty quickly. And on the downside, there was some heavy selling in some, across some themes. So we've got discount stores, department stores, stores. You see all stores. A lot of consumer related sectors. So like we said, market is starting to price in a recession, and we also had some earnings from some big retail players. So there was Walmart, there was Target. Um, Target had some pretty bad comments about business deteriorating, and I think that was on Thursday morning, either Thursday morning or Wednesday afternoon, something like that. And really, when they came out with those comments on their conference call, the entire retail space kind of imploded. Um, just total lack of confidence that there's going to be some sort of soft landing and the economy is going to start trending back up again. So if consumers tapped out, those retail stocks, they're done for. I mean, this won't be the last of a large drawdown you see in them. Um, the breadth on, if we look by market cap, was, let's see. Okay, so 1 to 5 billion. Okay, they went up 3%. What happened here? Oh, these top two split, so it's messing up our stats till that split gets adjusted for. Okay, so still not bad. Down 3/10 for 1 to 5 billion, and 5 to 10 billion down 1.3%. Still not horrible. I mean, the market was much worse. 50 to 100 billion down 1.2%. Or sorry, that was 10 to 50 billion. 50 to 100 billion down 1.3%. So pretty uniform actually overall. And 100 billion plus down 1.5%. So really the market, if you're looking at all stocks together, um, held up better than the indices would suggest based on weekly performance. And let's just see, what were the worst performers in this in the Terra caps? Yeah, so you see they're all the top three are consumer related. So Walmart, obviously biggest retailer in the world, down 20% for the week. It's probably the worst week that Walmart's had in recent memory. Let's just say that. Maybe even it could even be the worst week that it's had in my lifetime. It's been down 20% for Walmart is huge. Same thing for Costco, down 16%. Costco is actually quietly, I say quietly because I feel like it's a little bit under the radar, given how popular it is, given how popular the stores are. The stock, I think, is a little more under the radar, but I think it's kind of a hedge fund hotel stock. And saw some big selling in this on the back of the Target comments, like I was talking about. Tesla, you can argue, people will say, oh, it's a tech company, but really they sell cars. So, kind of a consumer company, down 14%. Oh, Cisco had very poor earnings and really got hit that day too, midweek. So down 13% for them. Um, those are really the standout, the double digit ones. But even down the line, you see Procter, Coke, Pepsi, all these guys, big down weeks, 7%, 6.5%, stuff like that. Lowe's down 5%. It's rough out there for a retail space. Um, if I jump over to intelligence and see what we've got coming up this week. Okay, what do we have here for bullish stuff? Okay, short China. Okay, that's interesting. High beta. This is a lot of this in traditionally has been a lot of oil and gas, commodity related stocks, regional banks, things like that. Um, Bear SaaS, so Bear Cloud Computing, gold miners, bullish crude, and okay, so something weird is going on because Hibbs is the opposite of Hibble. So there's not really any reason they should both be rated bullish. Although these are pretty illiquid ETFs, so it's possible that the pricing on them or something got messed up at some point, and it's messing things up. So for that reason, I'm just gonna ignore them and only consider SAS, miners, crude, and short China for this week, for next week. And if we look at downside, what do we have? A digital revolution again. So this is like, I don't even know, blockchain stuff and all of that. The digital revolution, future of money. Tech rated bearish. Ultra short financials rated bearish, so bullish financials, and that kind of, yeah, I mean, maybe I could see it. Drip rated bearish, so that sort of coincides with the bullish crude idea, and ultra short natty gas. So natty gas obviously been on a huge tear for months, so it looks like that trend is going to continue, and that's about it. I mean, pretty sparse still. I mean, like I mentioned this last week or the week before, that intelligence is really not that convinced um, with any ETFs that it's finding for really upside or downside. I mean, this used to the upside screen used to populate with maybe 8 or 10 a week. Now we're lucky if we get 3, 4, 5 on there for bullishness, and even on this bearish side, a couple weeks back there were a lot on here. There were a lot more on here, but for next week, there's not so much. Um, we had this sort of cluster of 10-year oversold signals. The market has made new lows since then, but not really convincing new lows. So, this is still in play, that sort of this area that we're in, is, should produce a pretty decent bounce, but it's been tough getting started because it's been sold down. Every small rally gets sold down almost immediately. So um, it's been really choppy down here around these lows, and confidence is really getting damaged because of it. Um, Seasonality wise, yeah, May isn't anything great to speak of. Just kind of a normal month. But so far, the sell in May axiom has kind of been at play. And I think that's about it. So, yeah, the weeks are not getting easier to trade, but um, eventually I think people are just sort of eventually there's just going to be a capitulation and people are just going to decide, okay, I want to be in. Whether that's soon or later in the year um, remains to be seen. I think we are putting in somewhat of a swing low down here around these levels just because of the oversold conditions that um, Stocklabs is picking out here. But overall, probably for the summer months, if you're looking forward that far, I would expect big ranges over the summer, like big rallies and big sell-offs. And then by the third quarter, fourth quarter, probably to um, resolve another larger trend move, whether it's up or down. But that's all in the future. For next week, I think just expect more of the same. Um, Maybe a sell off to start the week and then a rally the back half of the week, I would say, kind of the mirror opposite of what we had this week. Um, and yeah, so that's about it. Thanks for tuning in. I know we missed the live stream on Friday, but yeah, there were just some conflicts. So we'll get back to it next week with that. And yeah, you guys have a good weekend, and we'll check back in next week. See ya.